Hey, good afternoon, everyone. My name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. Today we're going to do a deep dive into our bank statement program, and we'll get started here in give it about another minute, let everyone log in. I'll introduce our two subject matter experts. You all known and recognize them. They've done a ton of these, so we'll introduce them in about a minute, get everyone logged in here. I think we have a good attendance today, one of the top that we've had so far. This will be recorded. We will get this out to you before end of day tomorrow. And if we don't get to some of your questions, we will definitely have your account executive reach out to you also before end of day tomorrow too. So hopefully we'll get all your questions answered. Give it another 30 seconds. People still logging in. Get my question box open here. And all right, looks like a lot of us already logged in. So again, my name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. I have the pleasure to introduce our two subject matter experts today. Stacy Flanigan, I get the pleasure of working with her every day. So Stacy, please introduce yourself.
Hi guys, thank you, John. I appreciate working with you too. I am in the Tampa Bay area. I have been with Angel Oak since the end of 2013. So guys, I'm happy to be here and help you guys get more business and close more loans and put more money in your pocket. And hopefully this bank statement overview will help you guys feel more comfortable with this program and do more loans with us.
Yeah, thank you, Stacy. And Oscar, you're a frequent subject matter expert on our webinars. Please introduce yourself.
Hey everybody, my name is Oscar. I'm out of our Miami office, part of the inside sales team. I've been with the company for about 7 years now, and I'm always excited to share our opportunities, especially here on the bank statement program.
Yeah, and Stacy and Oscar are always a top producer here. So I know when they're on these calls, I learn a lot. So hopefully you will all also. But before we get into the program, the bank statement program, we're going to do a poll question here. And the poll question is, who has originated a bank statement loan, who's closed a bank statement loan in the last 12 months? And I just want to share with you, since 2019, there's been over 20 million new business applications since 2019. It's the fastest growing segment of the workforce out there. So whether everyone's just starting a business or a side hustle, it's a growing part. And if you're not doing bank statements today, hopefully this will get you comfortable in doing them. So wow, the poll question, 70% have not originated a bank statement loan in the last 12 months. So hopefully what you'll learn here today, they're really easy loans to do. And when you have account executives like Stacy and Oscar to work with, they make it a breeze. So Stacy, let's get into it. Everything we're going to do today is off of our website. Again, this is being recorded. We will get this out to you before end of day tomorrow. And let's talk about our bank statement program, Stacy.
All right, sounds good. I will say that poll always just throws me for a loop that more people haven't done these bank statement programs. They're so easy to do, guys. So the bank statement program, we go up to a 90% loan to value. We go down to a 640 mid score. So what a bank statement program is, it's us calculating their income using their deposits going into their bank statements for the last 12 or 24 months. Now they can use business bank statements or they can use personal bank statements, whichever they put their deposits into. We're not looking at the outflow. We're just looking at the deposits. That's going to be the way that we calculate their income. So if you take somebody that's self-employed or 1099 for the last 2 years, most of them write everything off. They have good CPAs, they're writing everything off. So this way, we're able to use an alternative way to calculate their income to increase their buying power. Because more than likely, their deposits that are going into their bank are way more significant than what they're claiming on their tax returns. So this is a great program. It allows buyers to get into a higher priced loan, helping you close a higher priced loan mortgage as well. We go up to 3 million loan amounts. And guys, if you have one that's over, Oscar and I will be more than happy to help push that through for you. Anything over 3 million, just, keep bringing it on. Let us try. So everything with us is gray. It's not like conforming. You're not running DU. It's not a black or white scenario. So tell us the scenario, give us the statistics. Every loan has its own story. And there's exceptions to be made everywhere. So again, we'll use 12 or 24 months of bank statements, whether they're personal or business. We'll take, they can have 2 years seasoning on a foreclosure, short sale, bankruptcy. We all know what happened in 2020. So that kind of became a little bit of a common thing with forbearance and everything else. So that 2 year seasoning is over now. These people can get back into homes of their dreams if they had a foreclosure, short sale, or even a forbearance agreement. We also started introducing a 1 year self-employed program. So it used to be you had to be self-employed or 1099 for 2 years. Now we can do it with 1 year as long as you're using the business bank statements. So we don't take personal bank statements on as long as they are using business bank statements and they've been in the same line of work for 2 years. So if you had somebody that worked for a roofing company, W-2 for the last 5 years, decided to go out on their own, opened up their own roofing company 12 months ago, we're good to go on the 1 year bank statement program.
Yeah, Stacy, another great example of that is a doctor, right, working in the hospital, opens up their own practice, and they've been doing it for just a year. I mean, there's so many examples that we could give that fill into that 1 year self-employed. So that's a great example of the roofing company, Stacy.
And so many people started opening because of COVID. People got laid off. So many people started opening their own businesses, whether it was a little boutique or an online shop, social medias, all of these entrepreneurs that came out, influencers. I mean, social media influencers are huge right now. People were tapping into that market back during the COVID era when you couldn't go anywhere. You're sitting in front of your computer. All of a sudden, these businesses are taking off.
Can't hear you, Stace.
Can't hear me?
Can't hear you.
I can hear her.
Can you hear me now?
Hold on.
Yep, I can hear you.
Yes, this is live. So, yeah, can't hear
Anybody?
Stacy, I can hear you.
So, but I think where Stacy was going, Stacy, jump in anytime you can because I still can't hear you. So, but I think where Stacy was going, COVID created, some bad things, but it also a lot of people decided to start, doing their side hustles, and now it's a full-blown business. So, Oscar, I'll take over the rest of this. So, Stace, still can't hear you, but again, 1 year self-employed or 2 year self-employed, and we're going to calculate that income for you. So we have a team of experts. That's all they do all day, every day, is calculate income for you on your behalf. So that stuff we'll do that up front. Again, we have purchase, cash out, rate and term, owner occupied, second homes, non-owner occupied. I've been hearing a lot lately that our pricing on non-owner occupied compared to government is priced really aggressively. So take a look at that. Jill asked a question here about expense factors. A lot of that comes back to when you fill out that business questionnaire, how many employees they have. A lot of your, I'll use the example, a realtor, they work out of an office or out of their house.
Can you hear me?
We'll go down to as low as a 15% expense ratio on a person who is 1099, very low overhead, and but we default to a 50% expense ratio. Stacy, I don't know if you're still audio-wise, not. Okay. Oscar, anything else you want to share about the highlights of the bank statement program?
Yeah, so, we touched on, John, for those of you who.
Is everyone's audio? I can't hear you, Oscar, either.
John, I think it may be John's audio because I can hear Stacy. But for those of you who have not jumped in and done a bank statement loan, and maybe the reason why you haven't done a
Maybe
bank
it's
statement
me.
loan is
Go ahead,
because
Oscar. I can't hear anyone now, so.
maybe the reason why you haven't done a bank statement loan is because you're not familiar with the programs yet. You don't want to start something that you can't communicate to your customer. What John was mentioning that is that one of the advantages and the value of working with us is that you're going to be working closely with your account executive up front to make sure that your borrower checks the boxes that are required based on the matrix and the guidelines. We're going to ask those second and third level questions when we're reviewing your 1003 and your credit report after our bank statement department has calculated the bank statement income within 24 hours of receiving that. So shortly, we're going to show you all how you can submit that through our website. I just want to double check with Stacy to see if she can. Stacy, is your audio working yet? No? All right, well, that's fine. So we covered some of the highlights already on a purchase. What I want to do is I want to cover some other opportunities that we have. I'd love to encourage everybody to go through your past pipeline, especially when we had historically low rates. We're seeing a lot of opportunities when it comes to cash out. We're all in on cash out. We just recently had some enhancements on cash out, especially on the bank statement program. I like to say that the gold is within, and so some niches and opportunities that we're seeing, and especially an uptick in volume in this, are a recent upgrade when it came to HELOCs. We recently launched a HELOC option on the bank statement program. We had a recent training webinar on that you can find directly on our website. So you just have to go to webinars. You may see it here at the very top of the screen, and you'll be able to see all the past webinars. I believe we had that one just last week. So we have a HELOC option and a close-end second option on the bank statement program. And that's a huge advantage for you to go back and talk to some of your customers, because we have right now what's going on in this market, an opportunity where we can help more people cash out, because we have a combination of extremely high credit card debt. In fact, John shared on that webinar on HELOCs some information that I thought was pretty interesting. This is from the Federal Reserve Bank of New York. Credit card balances are over $1 trillion right now. And the average credit card rate right now is over 20%. Auto loans are at 1.6 trillion. But we also have the average home appreciating greater than 48% since 2019, $33 trillion of home equity, and 40% of homeowners own their homes outright. So this is a ripe opportunity for you to be able to help more customers either get a HELOC or close-end second, or even cash out, so that they can use some of that money to pay down their debts. And we're seeing a huge uptick in those transactions, and there's just a lot of demand from customers for that. A few recent enhancements that we had for cash out. We're now okay with cash out, unlimited cash out at a loan to value at 50% or less. We're okay with up to 2 million in cash in hand at a LTV greater than 50, up to 60%. And now, as far as the LTVs are concerned, for just a cash out on a primary residence, we'll go up to 80% LTV at a 680 FICO score. And on an investment and second home, we will go up to 80% LTV with a 700 FICO score. So those are some big opportunities for everybody on this call if a large part of your pipeline was rate and term and cash out, was cash out. I want to double check. John, is your audio back?
Yeah, my audio is back, and I apologize, Oscar and Stacy, so apologize for that. Stacy, want to just do a quick audio? I still can't hear Stacy. Can you hear her, Oscar?
No.
Okay. Yeah. Sorry about that, everyone. But so, Oscar,
Can you hear me?
Yes,
Yep.
I can hear you now, Stace.
Okay, I have to use my phone. I don't know why. Sorry, guys. I apologize.
This is live. This is being recorded. Maybe we don't want it recorded, but I apologize. I couldn't hear Stacy. Now you're in, so thank you. Oscar, give me just a quick brief. What did you cover the 1003, Oscar?
I haven't covered the 1003
Okay.
yet. What I did give everybody is just to give you a quick synopsis. We covered some of the cash out opportunities, and I gave everybody some bullets that you'd actually covered on the HELOC webinar with where the market is today and where credit card debts are and credit card rates are, and some of the value that our customers can help add to their borrowers who may need to pay off some of those debts.
Great. Thank you, Oscar. I appreciate you, as always, being a pros pro. And so, Stacy, talk about, we talked about, Oscar, talk about the 1003, and then we'll let Stacy talk about what we'd like to see on the credit, the credit score wise.
So, I highlighted earlier, and Stacy highlighted it too, that you're going to be sending us your 1003. You're going to send us the credit report. A soft pull is okay. The 1003 does not have to be signed by you, and it can be a TBD property as well. And you're also going to be submitting the bank statements for calculation. What we want to see on the 1003, I like to say, put that 1003 as well put together as you would be if you were going to be running DU or LP and you want to get your approved eligible. You have to give us all the information. John sometimes says this, we're like your confession booth. So you want to give us all the details. This way we can come back with a good decision. The value of working with us up front is to make the process seamless, because we're going to be returning with what we like to call our quick qual. Essentially, those are your findings. So on that report, you're going to have your next steps, and you're going to know exactly what you need to prepare for and submit your loan to underwriting to make sure that you have a seamless process throughout the loan. So we want to see everything on that 1003. You can actually leave the income blank because we're going to be calculating it on a bank statement loan. Do give us the employment history. Give us assets because as Stacy covered, we do require 6 months of reserves. We do make exceptions on loans, so we can go less with that, but we like to see the assets on there. And if it happens to be a refi, we're going to be showing you the quick quote and how you can submit all that information, but there's going to be a comment box there. You can add the address of the property for us there as well. When you submit this way, you're not triggering anything on your end.
Yeah, thanks, Oscar. And Stacy, you mentioned, basically you're doing a pre-underwrite, right, up front. So talk about what you look for, trade lines, credit, depth, history and stuff like that.
Yeah, so that's what's great about our bank statement program. We're going to calculate that income for you up front, like Oscar said, on a TBD property. So you're not wasting your realtor's time going out and showing them a house that's way under the price that they can afford. Because again, this is going to give you more buying power using the bank statement. So let us calculate that income for you up front. You submit the 12 or 24 months of bank statements, like Oscar said, with the 1003. And what Oscar and I and your AEs at Angel Oak are going to do, we're going to get the income calculated, but in the interim, we're going to also check and make sure that their credit fits the program. So what we like to see on the credit report is 3 trade lines for 12 months or 2 for 24 months. Now they can be, they don't have to have any balances on them as long as they were not closed out. In the last 12 months, we can use old trade lines as long as they're not closed. We can also use their rent or mortgage if they have a private mortgage or a mortgage that doesn't report to the credit bureau. We can use that as well. Now, I totally lost all audio. I could not hear, or obviously you guys could not hear me. So I don't know what all Oscar covered. And again, I apologize, guys. But if he didn't cover the part about a co-borrower, if you have a co-borrower that's W-2'd, we can use that income as well. And again, we're gonna look at their credit, their trade lines, and be able to use that income for even more buying power with just their 2 years of W-2s and 30 days of pay stubs. No tax returns. We never want to see tax returns on the bank statement program. So again, while that income is being calculated, Oscar and I are going to look at the credit report, make sure that their credit profile fits. If we have any questions, we're going to reach out to you. We're going to ask you, or if you put something on the 1003 that we don't want the underwriter to see, we're going to, let you know, hey, fix this or scrub this up before you go ahead and register the file, which would be your next step.
Yeah, Stace, that's always a great question. You know, if there's a spouse that's W-2'd, or even if that bar, like you talked about, Stacy, early on, that gig economy, right? They don't want to give up that W-2 income right now because it's still paying, and they have their side hustle. So, Stacy, the question would be, what % of their income has to be from that self-employed?
So we want to see only it's 35% of their total income coming from that self-employed job. So that gives you a lot of room to have more W-2 income, fixed income, Social Security, child support, alimony. All of that can be included to give you more income for your borrower.
So a lot of, everyone here on the call is, 70% of you on this call, and thank you for participating in that poll. 70% of you said you have not originated a bank statement loan in the last 12 months. And it's so I do want to bring up here, and I think Oscar talked a little bit about some statistics of, equity people have in their homes. They're at generationally low rates, but we calculate your income for you up front for the purchase, but we also have a bank statement HELOC program out there for you. And again, we're going to calculate that income for you. So, Stacy, thank you for sharing that about the credit report. Oscar, thank you for sharing about the 1003. We have some questions coming in here. Stacy, Oscar, you mentioned it, and if we're doing repeat of what someone talked about, we apologize again about the audio. But Stacy, I think you mentioned it, TBD, right? We'll do a pre-underwrite on a TBD, to be determined property. And it's the self-employed borrower that's buying those luxury properties out there. So, Stacy, talk about a couple of other tips and tricks. Why would you go 12 months versus 24 months?
That's a great question. So a lot of these people just starting their business back in 2020, 2021 with the COVID era, you can get all 24 months of bank statements, and we'll let you know if the last 12 months is better in income. We'll just use the last 12 months if they don't qualify off the full 24 months. But their first year of business, if it was only 2 years ago, you're doing a ramp up period. You're just trying to get your business going. You probably don't have an influx of deposits coming through yet. So that's the borrower that's going to only want to use 12 months of bank statements. They're going to have more cash flow in the last 12 months. 80% LTV or less, there's no difference in rate. 85 and 90, there's still no difference in LTV. There's a slight better rate if you use 24 versus 12. So really that's the only difference. So they'll give you the full 24. Let us calculate the full 24 months. And again, if we see that the last 12 is much better as far as the income calc goes, we're just going to use the last 12.
Yes, thanks. And Oscar said that, look, we're like your confessional booth. Get us the 24. We're going to tell you which way is the best way for the borrower to go. So, Oscar, what's the max LTV on an investment property if you're using your bank statements?
85.
Yeah, and that's one loan, no MI, right? So, that's pretty, but again, we'll work with you. Maybe the pricing's so much better at the 80% LTV. Stace, go into maybe a little bit more on the expense factors, what we default to and as low as we'll go also.
Yeah, so the expense factor, and again, I apologize if Oscar already covered that. The expense factor that we use, so we know all businesses have an expense. So we will default to 50%. If 50% works, we run with it. Nothing else is needed. Now, if we look at the bank statement calculation and we see that a 50% expense ratio doesn't work, we need more, we need to use more of the deposits, then we're going to ask for a tax preparer or CPA letter that says the expense ratio for ABC Yogurt Station is 20%. So if it's less than 30%, we're going to use 70% of the deposit. We'll go down to as little as 15% expense ratio, meaning we'll use 85% of the deposit. Now, somebody that would be a 15% expense ratio is like a 1099 employee. They don't have any expenses. Somebody that works from home, maybe they're an IT person, works on the internet, those influencers that are basically selling other people's products. They don't have to buy the product. So we'll look at that, see what they do. We also send you a bank statement questionnaire that will ask those questions. What does your business do? Do you have any employees? How many locations? And that'll help also for us to determine what type of expense ratio we can use. But again, if 50% works, then we just go with that. We don't need an expense ratio letter.
Yeah, Stacy touched on the 1099 aspect. So let's kind of cover some of the highlights, Oscar, for that 1099 borrower. Very similar to bank statements, but just let's cover some of that 1099.
Yeah, the credit and LTV and most requirements are very similar. The differences are in the documents that we're going to be collecting. So if we're looking at 1099s, then you're going to be getting, you can either do the last year's 1099 or the last 2 years of 1099s. And then we're going to need year-to-date earnings. And there are two ways that we can accept that. So you may have somebody who's contracted with somebody for 2 years, and what they may be working with a payroll company like ADP or Paychex, and they may be able to get you what's called a earnings report. And we can accept that report. You know, if in the event that they do not have that report, then we will need year-to-date bank statements for those 1099s. So we'll take the 1099s, and the process is the same, the 1099s and either the year-to-date earnings report or the bank statements, and we will calculate the income for you. Now, some of you may be saying to yourselves, well, what is the advantage of going 1099 as opposed to bank statements? And this brings up another enhancement that we just rolled out. But one of the advantages and opportunities that we have with 1099 is that we're not looking at all the bank statements over the last 12 or 24 months. In the same way that, you know, someone may not qualify because of the rules for underwriting income for a traditional loan, and that's why there's an alternative with a bank statement loan. There are things that also disqualify borrowers when it comes to their overall 12 or 24 months of income, like many months without deposits, etc. But we all know, because most of us, we're all in sales, we know that these sales cycles go up and down, right? And so there are times where, let's say that you have a realtor who had a few months that they didn't sell property, but then they have a few other months where they did. And so that may not look good for a bank statement loan, but when we do a 1099 loan, well, we're not, if we get an earnings report, then we're not looking at those bank statements. So we don't have 3 or 4 months without any deposits. Another advantage, and now, you know, this has just become an enhancement on the bank statement program, we're now okay with overdrafts. Where in the past we were capped, now we're okay with overdrafts up to 80% loan to value. So, you know, things are becoming a lot more flexible across the board, but you know, the 1099 option is still a fantastic option for those contracted borrowers.
Yeah, Oscar, you know, I want to hit on, Stacy talked a little bit about it earlier. You know, about 25 to 30% of the loans we close here at Angel Oak don't meet our guidelines, right? So it's really important to work with Stacy and Oscar or any of our other AEs across the country, because even if they're not 100% sure, we have a help desk. And if we get the exception on that up front for you, that exception follows your loan throughout the entire process. So I think that's really important, because how many times have you, Oscar, or you, Stacy, getting a deal where someone pre-qualified the borrower, now they realize they got their tax returns, right? And now they don't qualify. Those are the deals that we're getting because someone pre-qualified that borrower and didn't really get their tax return. So, Stace, we also have, it's not as popular as the bank statement program, but we have the P&L, and very similar to what Oscar was saying about the 1099. Talk about a P&L and why you would go a P&L maybe versus bank statements or even a 1099.
The P&L loan, for us, we go all the way down to a 640 score, which is strong, just like our bank statement and 1099 program. This one is maxed at 80% LTV. It is a little bit riskier of a income profile that we're using. So it's basically a CPA or tax preparer is going to prepare your P&L. Doesn't have to be audited. Those are very expensive. We need an audited P&L. So it's just going to be an P&L prepared by your tax preparer or CPA for the last 12 or 24 months. So what we're going to do is we're going to take the P&L and then 2 months of current bank statements. The 2 months of current bank statements has to support that income that the CPA is showing on the P&L within 15% tolerance. We have a little tolerance there. So as long as that income is showing within a 15% of those deposits going in the bank account for the last 2 months, we're going to use that P&L. Again, it's a bit of a riskier way to calculate income, which is why we're going to max it at 80% loan to value. Another reason why you would use this versus, say, the bank statement program would be if you're using personal bank statements and there's 2 people on the bank statements, they both have to be on my loan. Now, if one of them has really low credit score and they don't want that person on the loan, your next option is to look at a 1099 borrower if they're 1099. If they're not 1099, they're self-employed, do the P&L program. That way you don't have to have that other person on the loan.
Yeah, hey, thanks, Stacy. Appreciate that. Oscar, do we allow more than one bank statement to be used?
Yeah, we can, if let's say that you have customers, and Stacy and I see these scenarios every single day. You may have a customer who has 2 different businesses and they have 2 separate bank accounts for those businesses. We can use up to two checking accounts. You may have a customer who was scheduled, they were a sole proprietor and they worked out of their personal checking account and then incorporated, and they have a business checking account, and now they are working out of their business checking account. But we can see, we can complete the 12 or 24 month history with the personal and the business checking. You may have scenarios where you have a customer who is operating their business out of 2 different personal checking accounts, and we're okay with that as well. The one question that can help you save time and paperwork is you always want to ask your customers, are you commingling money? Are you transferring money between the 2 accounts? Because if someone is moving money between the 2 accounts, then we definitely don't want to overestimate their income. We want to make sure that we calculate the correct income. So that's something that we typically will not make an exception to to use 2 accounts, unless it's very few times that we can count. But aside from that, those are the exceptions we can make for sure.
Thanks, Oscar.
And if you guys to see if they're commingling a fund, it's kind of overwhelming, send it to us. Send us both sets of bank statements. Our bank statement review team, that's what they're going to do. They're going to spit it back and say, hey, I can't use both accounts because they're commingling a fund. So don't think that you have to do a deep dive into these bank statements, because I know it can be time consuming. We understand that. So send us both bank statements. Make sure both businesses are listed on the 1003. You might also have a borrower that has a business and the spouse has a business. We can use both of those business bank statements, like Oscar said, as long as they're not commingling of funds. And all of these programs, the 1099 and the P&L, also allows for additional W-2 fixed income. You can, again, you're increasing your buying power so these people can buy the bigger, nicer homes and get into these homes. Interest rates being slightly higher, DTI becomes an issue. So that way they can get their home, and once rates go down, they can refinance the lower rates.
Yeah, Stace, what I love about that is, if you know up front, this is kind of where I do my public service announcement here. If you know up front you are meeting with a self-employed borrower, yeah, grab their tax returns, try to go down that route, but why not grab their bank statements? And I think it would make you all on this call, the less touches you have with your borrower are probably better. So if you can go get those tax returns and grab their bank statements and have that conversation with them up front, and go down both parallel paths, and like Stacy has said on more than one occasion, you're going to increase their purchasing power probably 2, 3, we've seen it even 4 times as much. You know, and if they're gonna talk about the rate, I think Stacy always says, go have their CPA. Go ahead, Stacy, I'll let you take that away. You always say that.
So bank statement borrowers, I have never seen a bank statement borrower balk at the rate, because we can tell them, go ahead and show all your income on your tax returns and give Uncle Sam 35% of that amount, or take a slightly higher rate for a bank statement program. I mean, it's a no-brainer. And once a bank statement borrower, it's typically always a bank statement borrower. We rarely ever see them decide, okay, now I'm really going to show all my income so I can go conventional. They usually are always going to be a bank statement borrower for us. So,
well said, Stace. Well said. Aaron, we're going to show you a great tool that we have on our website that will show us rates. So we'll get to that here probably in about another couple minutes. Lost my train of thought. There was a question that came in. Sorry. Stacy, how do you? I'll ask Oscar. What do you use, Oscar, to prove that that borrower is truly self-employed?
Well, if we're going to, the conditions are going to come out and ask for the tax preparer or accountant letter verifying their ownership percentage of their company, how long they've been in business, etc. And for those borrowers who filed corporations that are on the Secretary of State, we're also going to want the articles of incorporation. You know, in lieu of that letter, if the borrower happens to have a legal operating agreement, you can also get the legal operating agreement. Another alternative may be, there are some states that also report the amount of shares that the borrower owns in of the corporation on the articles. So we can also accept that if that's available.
So Stace, Brittany is asking, what if they're a barber or hairstylist? And we get a lot of this. So go ahead, Stace.
Thanks, Tammy, because that's exactly what I was going to add on to what Oscar had said as well. If they're house cleaners, auto detailers, they don't have hairdressers, they don't have a corporation, then it's going to be a letter from a CPA or tax preparer stating they've been a self-employed hairdresser for the last 2 years. Now, if they're 1099 from a specific company, we can use a letter from that company stating that they're a self-employed or a 1099 subcontractor with their company for the last X amount of years. So there's definitely other avenues besides that corporation or the LLC, because some people just don't have that, don't need it, especially in the state of Florida. So we would defer back to a tax preparer or CPA letter for confirmation of self-employment.
Yeah, thank you, Stacy. Oscar, how do we treat large deposits? And it gets treated a bunch of different ways, but kind of how do you treat that, Oscar?
Well, if we can see a pattern, for example, let's say that I'll begin with our viewers are trained to exclude anything that may not be considered income. And if they see something that may be, you know, an anomaly, then that'll be excluded. So let's say that on average, the borrower is depositing, you know, $5,000 a month, but there's suddenly a lump sum $30,000 deposit that we don't see again in either the 12 or 24 month period. More than likely, that's going to be excluded because we can't bet that that's going to happen again. But in the event that you have a pattern, because a lot of businesses are seasonal, and that happens because mistakes, I mean, people are human and sometimes they could be wrong, then that's where Stacy and I come in and we review it, and then we'll ask those second or third level questions, like I was saying earlier, and we will get to the bottom of it. And if it's something that we can get added back, we'll request it.
So Stacy, this is another good question. What if someone's like a percentage of ownership of the business, like 50%? What percent of the deposits will we use? So it's a good question.
Yeah, so if we're using business bank statements, they do have to be a minimum of 50% owner of the business. So if they're a 50% owner of the business, then once we get the income calculation back, we will cut that income in half. So if they're 50% owner, we'll use 50% of the deposits minus the expense ratio. If they're 75% owner of the business, we'll use 75% of the deposit.
And if they're less than 50%, Stace, what's the alternative route to go?
Personal bank statements. So personal bank statements, you only have to be a 25% owner to be considered self-employed. So if they are less than 50%, then we can use the, we would have to defer to the personal bank statement.
Yeah. Great, thanks. I know a lot of people have asked questions about rates. So Oscar, let's go to, I'm gonna go back to our home page so we can show everyone how to get to our great, easy to use non-QM quick quote. So either here or up here to log in, there's Oscar. So Oscar, show us how to, how to get a rate quote, and then also what a lot of people have been asking, how to get a pre-qual to us, right?
Yes. So this is extremely easy to use, and you can actually do this on your phone. Sometimes, if I may be out grabbing a sandwich and I get a call from a customer, I'll help them price something out using my phone. So it's super phone friendly. All you have to do is fill in the very limited information. As you can see, John did not have to sign into anything. It's directly on our website. You do not need a password for this. You have full access to it. And as long as you plug and play the information, you're going to get back an answer. And so he's just priced out a 24-month business bank statement loan, and bang, you've got your rate there at the bottom. And you want to make sure to go ahead and click on view rates. That way you can view the full rate stack for the day. And I just want to give everybody a disclaimer. Rates, if you have not done non-QM loans, our rates do change. Sometimes there may not be a change in a day, but they can change on a daily basis. Some days there can even be an intraday shift. So at the end of the day, remember that this is just a quote for your customer until you go ahead and register your loan and lock it. But right now, you are not locking a loan. What we're doing is we're pricing out a loan for you. And then if you're ready to submit your 1003 in credit and your bank statements for calculation, essentially what you're doing is if you're sending this to Stacy or me, you're letting us know what you want us to use as an estimate for DTI. So here, John selected 7.25. Go ahead and click the select option button in blue. That's going to take you to step 2. You can actually skip this step by clicking next to get to the third step. And once you get to step 3, then you're going to choose us as the account executive. If it's me, all you have to do is type O on your keyboard and it'll go straight to me. And then you fill in your information, upload your 1003 and your credit report, and to the folders that have the red asterisk for 1003 and credit. And last but not least, get to the bank statements folder. You can upload all bank statements here. I want to give everybody a pro tip because this happens sometimes, and I want to make sure that your income gets calculated quickly. So if your customer has sent you their bank statements in a zip folder, you want to make sure to extract those files out of that folder, because if you try to drag and drop them, what's going to happen is you have not converted that. So we won't be able to open those up. You have to extract them to a folder on your desktop, and from that folder, you can then upload, and it'll capture all 12 or 24 months of those bank statements. And I did say, last but not least, something that you do need to do, you need to download this questionnaire by clicking the blue button. This is called, so a lot of people may call it a business narrative. This is just a brief description of the business. And one of the really important questions it asks that we need to know for the income calculation is, what is the ownership percentage of your customer's business? This is something that your customer can fill out within 2 to 3 minutes. It should not take a lot of time. And this can actually trail. So if you don't have it right away, you can submit the 1003 credit and bank statements, and then you can get us the questionnaire. Like I said earlier, we're your confession booth, and this is the confession box here, right? So that additional comments box is where you can give us any information. This is for our eyes when we're reviewing it. If you don't have a moment to, let us know over the phone. This is also where you can give us the property address if it happens to be a refi and you just can't have that on your 1003. So you can give us the property address there. Once you're done with that, click submit. Give it a few seconds, wait for it to say successfully submitted, and you're done. You're in line for review. This is the quickest way to get it done and the most secure way to submit everything to us, because sometimes we are on this call or we're training other customers. And if you send things through email, well, then you're gonna have to wait until we get to our email again. and upload it that way. So this is the quickest way to get in line, everybody.
Yeah, Oscar, what's it cost to get the income calculated on the bank statements?
The actual cost is $0.
So, yeah, so, I mean, this is pretty easy. And Oscar, what's your turn time for like a bank statement pre-qual?
We're doing them so fast. So the standard, I would say, if you send it, look, if you're sending it in the morning, we're getting those calculations done by afternoon and sometimes even sooner. I quote 24 business hours because that is a turn time, but we're getting it fast. So if Stacy or I get that calculation, if we have everything that we need, we're going to get you that answer that day, as long as it's earlier on in the day and we're not sleeping, right? And later on in the evening, but we work late too, right? So we're going to try to get this out to you same day if we can. But the typical turn time, yeah, like I said, it's sometimes within the day, but typically you want to let your customer know about 24 hours.
Yeah, and I'll go back to, what Oscar was saying about the 1003. Don't put any income on that 1003, right? We're going to calculate that income for you. And as long as that 1003 is filled out pretty well, that also helps with getting your pre-qual back to you quicker, sooner rather than later. So, Stace, let's go. We had 70% of the people that took our poll say they haven't closed a bank statement loan in the last 12 months. So I'm going to pull up, let's talk to we talk about underserved borrowers here, right? I think a very underutilized portion of our website is our marketing portal. So Stace, let's talk about our marketing portal.
Yeah, and while John's logging in, you do need a login to be able to access our marketing portal. So if you don't have them, definitely reach out to your account rep and we will get you set up with login credentials. And I'm sure Oscar touched on it earlier. These programs for the bank statement is 1 to 4 units, condos, non-warrantable condos. We see a lot of that here in Florida, the non-warrantable condos, owner-occ, non-owner-occ, second homes. So all of these can be done through the bank statement program. So John was very lickety-split here. He's already logged in. So you'll see up at the top across the banner going across, you'll see marketing portal. When you click on that, you can go down to flyers right there. Now, all of these flyers, all you have to do is select the one you want. John's going to probably select the bank statement program since that's the one we're talking about. There's ones for why rent when you can own, our DSCR program, non-warrantable condos, foreign nationals. There's probably about 20 different bank statements that you can choose from. The 1099 program. So all of these all of these flyers will appear here.
Yeah, mine's not popping up. So.
Yeah, I don't know why. We're having a lot of technical difficulties today.
Let's see.
So what you're going to do is on the left-hand side of the screen, you'll see where you can upload your logo. You can put your logo, your picture, your I've had people just make them fun. Maybe they'll do a co-marketing with a realtor. So they'll put their logo on one side and the realtor's logo on the other side. I've had them put their favorite sports team on there. Make the flyer your own, make it fun, put your photo on there, and then all your information. So all this marketing material, all these flyers is going to have your information. It's going to be your contact, your logo. Angel Oak is nowhere on there. They're calling you. It looks like it's your program. We're nowhere to be found on here. And this is all free for you guys. This marketing stuff is free. That's why John's saying it's so utilized because people either don't know it exists or forget about it. You can drop these off at open houses. If you're going to go hit, you're just be doing some marketing and you're going to go hit realtors' offices, bankruptcy attorney offices, wherever you might go, find the flyer that might be the best fit for where you're going to start to market, or if you can email them out, you can blast fax them out, whatever you want to do. And again, this all has your information. We're nowhere on here. So these are great. Here's a 1099 program that just came up. And once you fill out all that information on the left, it automatically populates on all of those different bank statements. So you don't have to fill it out each time. You log in, you do it once, it's there for any flyers we add. Our marketing team is awesome. If there's something that you want us to add or tweak, feel free to call the AE. Our marketing team is great, and they will customize it the best that they can. If you guys have something specific that you need us to add, or a certain flyer that you think is a great flyer and you need it for a presentation.
Yes, Stace, I like, or Christy, our AE in San Antonio, says that, Angel Oak is really invested in your success, right? And this entire marketing portal was put together for you to have your success and to educate and inform everyone about these alternative programs out there. And you said it well, Stace. Our marketing department's the best in the business. So let's talk about social media posts, Stace.
Yeah, so social media posts, we all know that saying, out of sight, out of mind. Social media is the hype of nowadays. I mean, it's everything. It's LinkedIn, it's Snapchat, it's Instagram, it's Facebook. I mean, my kids call me old because I do Facebook, and apparently that's old people social media. So all of these are easy. The younger ones like Oscar and all them, they use all the more common hip social medias. So you guys can take these social media posts, blast them on whatever social media platform you want. It's all right there. It's done for you, and it's just keeping that in front of your clients or prospective clients. It's letting them know, hey, I do a no income loan on investment properties, or hey, I can calculate your income using your bank statements and not your tax returns. It's just giving them that little, it's just enough information to keep them or to give them information to call you. Hey, I saw that you posted that you do jumbo bank statement loans up to $3 million, or whatever the case may be. It's just keeping in front of them with these little posts. I have people that do it on a weekly basis. Again, out of sight, out of mind. Now we're in the days where everybody works from home, or a lot of people work from home. So going to offices, sometimes you're not going to get a whole lot of people there. Stay in front of their social media.
Yeah, Stace, this is kind of where I challenge anyone on this call today to reach out to your AE or go into our portal and create a social media post, and I think you'll have a lot of great success. Stace, let's talk a little bit about what you do a lot of, and you do it very, very well. Let's talk about the presentation, the realtor presentation.
Yeah, so if you guys are going to do a realtor presentation, call your AE, have them come out with you, or if it's Zoom, have them go on the Zoom call with you. We don't expect you guys to be experts at this portfolio program. We are the experts. So we'll be there for you, and we represent you. We're not talking about Angel Oak. We're talking about you guys, your company. We're there as your business partner. So we have presentations geared towards a realtor presentation. So again, you can customize these presentations with your info, your logo. Angel Oak's nowhere on there. And we'll talk about our different programs. We'll talk about all our different programs. I did one with a broker down in Fort Myers, and he actually added his programs to the end of my slideshow. They have a bridge loan. I offer a bridge loan. So he added slideshows of his companies that they offer that they can give to their borrowers, and made our presentation, longer but to suit him and to give them the whole aspect of everything that he has to offer. So they're great. Again, they're great presentations. They're customized to you. You want us to delete, or you guys can even delete certain ones that you don't think are pertaining to your audience. Perfect. Let's do that. You want to add some? Let's do that.
Yeah, Stace, very well said. It's and I usually throw out this stat, and if Oscar said it earlier, I'll apologize for repeating it. 9% of the loans we close here at Angel Oak underneath our bank statement 1099 P&L program, 9% of those loans closed are realtors. So the odds if you get about 12, 13 realtors in a room, you're probably going to get one of their loans, right? So I think it's probably the most powerful presentation you can give to your referral sources. And why not have a Stacy on there or an Oscar on there talking about these programs specifically on your behalf and not saying anything about Angel Oak. I jokingly, Stacy's probably going to laugh and like I say we're almost in the witness protection program. They don't come in there with cards or a badge on. They're going to say they're just one of your investors, like Stacy said. Her partner went in and presented other programs that they have, whether it's a bridge loan or whatever. So, Oscar, anything to add? Oscar, you do a great job presenting on your loan officer's behalf. Anything else to add regarding marketing, Oscar?
I just emphasize that, you know, there are a lot of people who are no longer going into the office, and a great tool that we have is Zoom. We also have Microsoft Teams. So if you don't have access to that, and you may have a realtor shop and your challenge is that they just simply don't go to the office, then that should not be a challenge at all. You just let Stacy and I know, and we'll go ahead and set up the invitation, whether it be Zoom or Microsoft Teams, and we will send you that link. That way you can share it with that office. And I mean, we've seen the turnout to be great, right? Because there are less obstacles for people to have to show up. You know, they can sign on using their phone. I mean, you saw how quickly we had an audio issue, and then Stacy is signed on her phone. So that can happen in time, and there are people who may not show up in person because there may be traffic, but at least they can sign on from home, or they can sign on from their phone, and we can present to them with you.
Yeah, Oscar, very well said. You know, so Mark's asking a question here. Do you typically get more qualifying income out of bank statements versus 1099? I would say, Mark, give us both, right? You know, it doesn't cost, you know, zero for us to calculate your income for you. So I would even go back and challenge if you had a self-employed tax return and get their bank statements and see what would have been better, you know. Oscar, anything? What's that, Stace?
I'll kind of add to that too. Mark's right. A lot of times we will get a little bit more income out of the bank statements because you might have counter credits, cash deposits that we're all going to use in the bank statement calculation, where the 1099 is just the 1099 income. So I would definitely, like John said, if you want to get both, the only time I've seen where we have had to use a 1099 is, again, if you're using personal bank statements and we don't want that other person on the loan due to credit, we had to go the bank or the 1099 route. But that's a great question. So yes, I typically see more income being used on the bank statement program than 1099.
And the beautiful, and Oscar said it, Stacy said, you have two professionals here who will take it either way you want to go. I mean, they know everything. I promise you, they've seen everything. So, Oscar, anything in closing?
In closing, for the 70% of you who have not done a bank statement loan, you can see that you know, just we are very trusted, and we appreciate all the business for all those customers. That 30% of you that have closed bank statement loans, and hopefully you close them with us. Do not be afraid of originating one. We're going to be your lifeguards. We're not going to let you drown. I encourage you to go ahead and in that chat feature that we have, if you don't know who your account executive is, please write a comment and post call. We will reach out to you to make sure that you're connected with your account executive. And if you have, if you just feel like you want a follow-up presentation, we can present to you, we can present to your branch, and we can do a one-on-one training for you all. That way, in a matter of 30 minutes to an hour, you will be an expert on this program or any one of our non-QM programs.
Yeah, good point about the other programs too, Oscar. Thank you. Stacy, in closing.
Yeah, exactly like Oscar said, don't be afraid of these. I know they're, you know, foreign, you might not have done one. We'll hold your hand the entire step of the way. We'll walk you through it step by step. Honestly, we do have video tutorials to walk you through it, but picking up the phone, calling me, I can walk you through, sending me a pre-qual within 2 minutes. Submitting the loan, submitting conditions, everything is done either on our website. We do have videos, or just giving us a call. We'll walk you through it. We're not going to let you drown, like Oscar said. So don't be afraid of them. You know, just closing 1 extra or 2 extra non-QM deals a year can put a lot of money, extra money, into your pocket and help boost your business. So don't be afraid of it. Call us with any scenario. If you can't get it done conventionally, call us. Whether you think we can do it or not, there's so much gray area with our programs. Just call us and let's see if we can help you.
Yes, Stace, great points. Just a couple other things I want to add to this is, if 70% of you have not closed a bank statement loan in the last 12 months, imagine what your referral sources don't know about these loans, right? So, and if it's the fastest growing segment, the self-employed market is the fastest growing segment out there. I'm telling you, it's up to what we're doing here. The same thing we want you to do to your referral sources, educate and inform them. Because whether we like it or not, they're pre-screening your buyers and borrowers. So let us help you educate your referral source on your behalf. You can see Stacy, Oscar, all our other great account executives across the country will put your best interest to your referral source. So again, this is being recorded. We will get this out to you before the end of the day tomorrow. And for those of you who have closed loans with Angel Oak, thank you for your business. For those of you that don't, trust us, we'll close your loan for you. And again, you have 2 subject matter experts, Stacy, Oscar. Thank you for always being the pros pro. Love working with you guys. And everyone, hope the rest of your month is a great month. Thank you, everyone, for joining us.
Thank you.
Thank you, everybody. Have a great day.
You too.